Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Friday, October 5th, 2012. And here we are. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that thought in mind, let's take a look a bit at the week that was. And we saw that we had IDP employment this week, ISM manufacturing, and finally on Thursday morning we had jobless claims, which came in a little better than what was expected. We had factory orders, which were basically in line. And what we're looking at for Friday is we're looking at the employment numbers for the month of September, and we really don't know exactly where they're going to come out. We'll find out exactly where we're spending, whether we're hanging around that 8% level that we've been hanging at for quite some time now. Let's take a look and see what the SPX did the first 4 days of the week. We see that our overall trend is still continuing in an upward direction. We're trading in our trading range between the 30-day moving average and our diagonal. We see that as we came into Thursday and into Friday, that we are in an upcycle in the market as we're getting higher highs and higher lows. So we're in an upcycle in an uptrending market. Let's take a little closer look at the 4 days of this week. And we see that as we look at Monday, we saw that we had a big move up, and it wasn't able to maintain or hold that move. And there was some doubt on Tuesday whether we were going to go and pull back to that moving average. Then, as we saw, we came into Wednesday, we got higher high, higher low, and then finally on Thursday, you saw that we had this big move today, up 0.72%, up 10 points on the S&P, as we had the day after the huge debate. And so now we'll see what we're going to do on Friday, as it looks like we've gotten to the top of this trading range that we've spent time in for the last couple months, so at least for the last month. So let's see what we can expect as we go into Friday, as we look at some of our other indicators. It looks like the air could be getting a little thin here. We could maybe expect a gap up on Friday morning and then a bit of a pullback, as we might put in a bit of a topping signal here in the market. But nice move up on Thursday as we covered most of that range that we've currently been trading in. Air could be getting a little thin up there. How'd the Dow do relative to that? Well, we see that the Dow also is in a bit of an upcycle, but didn't reach quite the same level that the S&P did, as the Dow lagged a little bit relative to the S&P this week. It did have a good day on Thursday, is up 0.6% and up 80 points on the Dow. As you see, we are a bit away from that 30-day moving average. Next, let's take a look at the NASDAQ, see how the NASDAQ fared relative to the two other indices. And we see that the NASDAQ isn't showing that kind of strength, quite a way away from the recent high, and had a hard time breaking away from this 30-day moving average, as the NASDAQ didn't get as excited as the other two indexes did as we had the 4 days of this week. And certainly the debate could be part of what we're waiting for, but ultimately what we're waiting for is we're looking for earnings season next week, which begins with Alcoa on the 9th. Finally, the Russell 2000 traded in a sideways range and didn't give us any indication that it also wanted to head up, as we see the Russell 2000 trading sideways and basically going nowhere for the week to this point. All right, with that thought in mind, let's take a look at some of our other indexes that we have. We see the VIX pulling back as the market is pulling up, exactly the expectation we have for it, down at about 14.55. Certainly could pull a little bit back, a little bit further, if it goes down to its previous lows, which were there and there. All right, down about another point on the VIX is possible. All right, next let's take a look at bonds. We're looking at TLT. our 20-year Treasury bond fund, and we see that we went up and we touched that diagonal line that has acted as resistance for us, and we got a bit of a pullback as the market moved higher. So the bonds could be ready for a bit more of a pullback. It basically will depend what the overall market does. And so that's TLT, our ETF, for looking at the bond market. Next, let's take a look at the financial, which had a huge day today, up 1.48% for the day as the financials basically led the market up, showing good strength and on volume. So certainly a big plus for the overall market and the S&P. All right, so that was the XLF, our ETF for our financial sector. Next, let's take a look at oil, and we see that oil basically pulled back everything it gave away yesterday, and it recovered from yesterday's losses as it basically, oil bounced up about 4% in the pit trading today. Had a session low of 88.66 and eventually settled at 91.69, which was very close to the height of the day, as we saw oil move up strong as the tensions escalated between Turkey and Syria, and that's the kind of international news that can move the oil fund. All right, let's take a look at that safety haven, gold, and see what gold did on this day. And look at, we have a bit of a breakout, kind of closed above our previous range, and we see that when we look at that, let's erase that so we can see it. There we go. We look at that. Gold was up $1.20, or the GLD was, and up 0.7%. If we actually looked at gold itself, we see that it had a session high of $17.97, almost hitting that magic $1,800 an ounce level today. Did pull back a little bit as we into the close, but it basically pushed prices back up late in the afternoon as they focused on the ECB's decision to leave rates unchanged, and there was other things going out with the FOMC minutes. So flight to safety as we had a bit of a pop out in gold, almost getting to that $1,800 an ounce level. And finally, looking at our spider, we see that as we look at the SPY, what kind of volume did we have? Basically right around average volume, and so moving up, getting away from that 30-day moving average and following normal market cycles as we continue on and go into Friday. Look for the air to get a little thin. I wouldn't expect any big moves above this previous high on Friday as we go into the weekend. So for those of you that are gold members, stick around. We've got our stocks to watch. And for those of you that are not gold members and would like more free videos from Options University, go to www.optionsuniversity.com/free gold. And this is Butch Shorak, Options University. It's Friday, October 5th, 2012, and thanks for being here. And to our gold members, welcome back. Let's take a look and see what we can expect out of this SPX. As we looked at this on Monday morning, we saw that this was our next level of resistance, and you see that we've popped through that. We got 63.50 above us, and then finally that high of 1474.50. So a bit of room. We could move higher, and it would bring us up to this level like so. So on Friday, what I want you to do is I want you to watch that first hour. See where the market's trading relative to that opening high and opening low for that first hour, and it'll give you some kind of indication of where the market's going for the day. Expectations are we certainly could get a higher high and a higher low following this diagonal line that we have here. Remember, though, we've been trading in this yellow zone, so if we do start showing a little weakness after that first hour, we can start retracing back down to potentially that 1450 level, and then back to that 30-day moving average, which certainly has been headed up. Would be normal movement for the market. And we do have news coming out, economic news coming out with the employment numbers on Friday morning, on this morning at 8:30. So watch that first hour to give you an indication of where the market is going as we close out the week in this first week of October. And also remember, we also have the threat of European news, as there's been a bit of news about Spain as the evening went on yesterday afternoon. So we'll see whether that has an effect. There was another announcement by Drox. So these are the things that can move the market with this economic news. So with that, let's take a look at some of our stocks to watch as we look at Amazon. Keeps on chugging along. Didn't quite make its previous high, showing a little of weakness compared to the overall market, but certainly showing that it is a stock to be reckoned with as it bounced off that moving average, and as the week went on, showed that strength and gave us a buy signal on Wednesday as we got a higher high and a higher low over that 30-day moving average. Amazon certainly gave us a opportunity for a bullish swing trade. Next, let's take a look at Apple. Apple kept pulling back, and then finally on Thursday or on Wednesday did give us a higher high, higher low after we got that doji on Wednesday. And we see that it did pull up, but showing a little weakness here. Didn't really want to pop up on Thursday, as we saw Apple may be a little bit overextended here. Did have a nice run after, and many times Apple will sell the news. However, we are going into earnings. Earnings are coming up basically around the 25th to 26th for Apple, and this certainly is a stock that's been known to run into earnings. So if the market starts heading back up, you can fully expect that Apple probably will follow and head towards its previous highs up there around 700. So watch for that buy signal on Apple if you're not already in it. Okay, let's take a look at AutoZone. Had big day today as it gapped up with the overall market. Sitting at resistance, might get a buy signal here if we break through that high with some kind of volume down here that looks worthwhile. And so watch AutoZone, potential for it to head up to that previous highs up there around 387. Okay, AutoZone, another stock to watch. Then we'll take a look at a stock that performed like an absolute champion last year, and it looks like it could be headed lower. Not too late to take advantage of this CMG weakness. It is sitting at quite a bit of resistance here, but if it breaks through that resistance down there, look out below as we see CMG losing some of its glamour in the market, as it is showing weakness while the market was going up. Let's take a look at Google, heading into earnings coming up here very shortly next week, and look at it, just keeps going right on up. And it certainly is getting close to that earnings, and so we'll see how high it runs, if it runs all the way into earnings. Certainly has looked very impressive this quarter as Google just kept right on cooking along. Next, let's take a look at Green Mountain Coffee, which has lost some of its pizzazz from before with problems with its CEO, sitting on support. So if the market does pop up, we could see it have a little bit of an earnings run. Earnings are due right around November 1st. So if the market does go up, this is one that may want to pull back up into some of those higher levels again. But at the moment, trading below that 30-day moving average, but a little bit of volatility there in Green Mountain Coffee, and that you might be able to take advantage of. Next, looking at our medical stock that we watch every week, ISRG, we see that it is trading in its zone. Look for a breakout with volume, as it is at the top of this yellow zone. If you do not see it break out and we see the market pull back, certainly is the kind of stock that you could look at for maybe some kind of condor, using your call and put spreads to pull premium out of this stock. Next, let's take a look at a stock that certainly had a big run ever since the Bernanke move, and that's MasterCard. And it just continued this week as we had 4 strong days up, long way away from the moving average. Certainly no position at this point to be taking a bullish position in MasterCard, as it is a bit overextended. Wait for that bounce. When it bounces, it could come back down to about this 445 level. Gave us what looked like maybe the beginning of a rollover signal on our candlesticks. One of the beautiful things about candlesticks is it gives us real-time indicators versus most of our other indicators, which are lagging indicators. The beauty of candlesticks. Looking next at McDonald's, what's McDonald's doing? The market's going up. McDonald's pulled back. Didn't have a great week. Not looking real strong. McDonald's may have to wait till earnings before it gets any of its pizzazz back. Earnings coming up in the next 2 weeks. One of the things we'll be looking at all these stocks is that when you are running into earnings, someone will run into earnings, but be careful. Do not hold these stocks through earnings. Be careful of your strategies. Next, taking a look into Nike to see if it's doing it. And we see as we look at Nike, it is just going nowhere. Had earnings, obviously not all that exciting, and Nike going nowhere. On a kind of stock, what kind of strategy to use on stocks that go nowhere? You can look at butterflies, you can look at condors, do the strategy of your choice, but it sure isn't showing us much at this particular point, just kind of wandering around. Taking a look at a stock that is dependent upon Europe and waiting for Europe to rise back to its previous levels. Has not filled the gap from that previous earnings. Earnings coming up on the next week, so maybe time to sit on the side. If you like to do earnings plays, maybe this will run into earnings. It has another 15-point potential to the upside before it hits its next resistance. Did give a buy signal on Thursday with a higher high and a higher low. So Priceline coming into earnings next week. Be very careful about holding these things through earnings. And here's why. Look at that gap down. Almost 100 points. And finally, last Monday we talked about watching W.W. Grainger, see if we're going to get some kind of breakout. And breakout we did get, and for those of you that paid attention to this, you certainly had some potential there to pull some money out of W.W. Grainger as it finally broke out of that trading range and is headed to a new area. How far does it go? What's expectations? Well, there's something called an equal move. So if the move was from 202 to 210, then the next move is basically from 210 to about 217.50 if we get an equal move, which is technically what we'll be looking for out of W.W. Grainger. So if you got into that, follow your candlesticks on up with stops and preserve your profits if you get it, but we could expect this thing to go to 217.50 as W.W. Grainger finally got that breakout. Was it on big volume? No, but this thing certainly is capable of being a wonderful trading stock, as we saw great earnings coming out of it last time, and earnings coming up on this basically the week after next. So W.W. Grainger, one of our stocks to watch. So with that, that's the week that was in the market as we had this lull week, waiting for earnings to begin with Alcoa, which begin on the 9th. So with that thought, this is Butch Chorak, Options University. It's Friday, October 5th, 2012, and trade what you see, not what you think. Technical analysis is what gives you an edge in our markets. Thank you for being here. We'll see you Monday morning.